Hello, everyone. Welcome to Chat with Traders Community presentation. We're having our guest, this is your host, by the way, Ian Cox, and we're having Michael Katz on for a second time. If you'd like to get some more background on Michael's history, how he got into trading, be sure to listen to the recorded episode we had back on November 30th, where he goes into detail about his past and a live example trade on Alibaba. So, Michael, welcome back to Chat with Traders Community.
Yeah, hey, and it's great to be back and joining the first time. So that will be a great one too.
Yeah, it's been a couple months since we've had you on, and reflecting on 2022, the year 2022. How was that year for you, and some of the the traders that you're in contact with? How did 2022 go down for you and your fellow traders?
Yeah, we had an amazing year, generally speaking, myself and also the traders that we work with. Trader Pool, the company that I'm a CEO at, is basically funding traders, and what we did is we just started. So in 2022, so in the summer. So we had the first round of understanding what we were doing basically. And as soon as we start getting some traders, some good traders, it was amazing. And then we ended up this 2022 with a great result.
Mm-hmm. So the bear market of 2022 was unable to dampen some of the returns that the traders that you have contact with.
Yeah, I mean, since we're mostly what we do is day trading, so bear market, bull market, both will be great for us as long as we have volatility. That's exactly what we're looking for. Of course, if we're looking at the long-term portfolio, most people got hammered 20%, 30%, and that's obviously sad, but that's the market, that's the market cycle. So it will return someday.
Right.
Don't do it. I'll cancel my plane. Hey, I don't know, maybe.
Yeah. Oh, great. So yeah, I have a couple friends that were day traders in 2020 and 2021, and 2022. They basically had their account drop 90+%, and
wow.
And then they lost their pattern day trader, or their account fell below 25,000, and so they're deemed a pattern day trader, and so they're restricted in what they can, how frequently they can buy and sell. So I imagine there's traders like that in the market, and they've had these big drawdowns, and they get discouraged and thinking, well, how am I ever going to build my account back up? What can I do? And what can you say about that, as far as because have you blown up your account in the past throughout your years? I believe you have, right? Yes,
that's a great question. Yeah. Well, I didn't blow my account, but I did got hammered. Yeah, it was 2 or 3 years ago. I lost almost 100K out of it was 400,000. So it was very 350. So it was a very hard losing trade. One losing trade that went to 3 days that I lost money every single day with the same trade, but I recovered, fortunately. When I first started to trade, I had like $10,000 in my account, and I lost 30%, 20-30% out of it in the first 6 months. Again, fortunately, when I came into trading, I actually took a lot of time, like 2 years before really trading, just to understand what it's all about. So I had a nice preparation, and my foundation were pretty strong. So fortunately, I didn't blow a full account, but yeah, I lost some money.
And what would you say to traders whose account is below 25,000 or fell below that, to kind of get back in the groove, to encourage them?
Yeah, so if we're talking about the mental side, the psychology side of it,
sure.
So the way, at least what worked for me, is first of all taking some time off, right? I took 2 or 3 weeks that I literally didn't touch the keyboard, and this is something really not something that I used to, right? I used to trade every single day. Even if I'm done with trading, I still sat on the computer and continue to analyze the trades that I made, looking at the charts live, all of those things. And those were actually like 2 or 3 weeks, probably the first 2 or 3 weeks that I took off of trading. Even when I was on vacation, I took my laptop and traded from the hotel. So, so in this case, take some time off. The second part is, as soon as you're ready, go through the trade or the trades that got you into that position, what actually made you blow your account, and really learn it in depth. So analyze what made you choose that asset, that stock or that pair, whatever it is. Then the entry price and your stop loss, and how did you manage the trade, and how did you manage the risk. So really understand what happened there, because if you had a great year, or you like break even or just a little bit in profit, and all of the sudden you just blowing your account, something happened radically there that actually made you do that. So try to find what it is, and then it will be easier to come back mentally, because you will know technically what you need to do right. That will build your confidence again. Of course, start slow again. Don't, if you used to risk $500, risk $100 for a trade, right? Just start, baby steps until you get that, again, the confidence that you know what you're doing. Hopefully for me, it happened after I was trading like 12, 13 years. So I had that in the back of my mind, that I said to myself, okay, you know what you're doing. You're not just trading 6 months or a year, and you still have those doubts. So in my case, again, it was a little bit easier for me, but that's what I would have done if it happened to me when I first started to trade.
So you think that this process of analyzing, going through trade by trade, looking at what went wrong, and starting off much smaller than you normally would, is a great way to help people with negative self-talk of like, oh, it's like, maybe I'm not cut out for this. I'm so dumb, or I, this kind of negative psychology attached to, losing that money.
Yeah, regarding the negative psychology, there were times when I just looked into the mirror and said to myself those negative things. And a day after, when I, came a little bit more refreshed, I looked in the mirror and say, okay, you can do that. All those pep talks that usually you see in movies, coach, in football or basketball, a coach take the team and push them and make them better, basically by just talking positive. So do the same thing. If you doing the negative part, try to reduce it and build it when you just put in more positive to your words, because those words will mean a lot.
And do you have any kind of guidelines for yourself or advice for others on when you start off much smaller, like how many like a certain number of winning trades or winning weeks, winning months before you start to scale up? Like how quickly should a trader scale back up?
And it's a discretionary, right? I don't see it as a 1 or a 0, like a 0 or 1. The thing is, you need to build the confidence, because if you already know what you're doing, let's say you're in profit generally, and you blew your account or had a major drawdown, then you already know what you're doing. So what you need to do is basically give yourself a little bit more confidence again. So you can start, like I said, small, take 2 weeks, a month of trading, and see that you getting back and understanding again that you know what you're doing, build that confidence, and from that just jump a little bit more. So like 20% more risk, another 20% and another 20%, and so on. Traders will understand, like, if he's doing the right thing generally, he will understand when it's a good time to increase.
So for anyone who has questions throughout the presentation, please enter it into the chat window at any time. Thank you. So what about when it comes to the topic of, say, okay, so we all have experience managing our own money. Have you ever managed friends and family's money?
Yeah, not just friends and family. When I first started, I started with my money, $10,000. Back in those times, it was hard to me to bring it, but I worked hard and I gathered it. And after a while, when I saw that I lost that money, returned it, and all of those things, after probably 2 or 3 years in the game, people, of course, knew that I'm doing that. So either friends or family, or just other traders, families. I used to be also a mentor and a coach for other traders. So they were at the beginning of their trading, and their father or mother or whatever it is, they knew about it. So they came to me and wanted for me to basically trade for them, because everybody want to make more, right? And 5% or 10% a year is not enough. So yeah, I have a lot of experience with that. In some cases, I lost money for other guys that I traded for, unfortunately. But generally, it was positive experience. The difference, I guess, when it comes to trading on your own capital or others, is that the money-wise becoming a little bit more detached. So instead of risking your own money, you feel, on one hand, you feel not obligated to the money, and on the other hand, because you feel obligated to the person, you're becoming a little bit more like, not respectful, but I'm missing the word right now, but basically you feel like you want to show him that you know what you're doing, so you take it a little bit more carefully. Yeah.
Yes, I found the same way also when I've managed friends and family money, often being too cautious.
Too cautious, yeah.
Yeah.
Sometimes it can do that, yeah. What I did when guys came to me and wanted them to, and they asked me to manage their portfolio, I always first ask them if they know about risk, if they have any experience with risk, losing money, and generally in trading, because I wanted to trade for guys that understand that it's about risk. And if you're not risking, and if you're not losing, you cannot make money, and those kind of things. That helped me to really push aside as much as I could, push aside the fact of the money aspect in trading,
And what did you find people's expectations typically were? That people who you traded for, whether they knew about the market or not. Did you find that they had realistic expectations of like, well, the average return per year is 10% or S&P 500 or whatever. If you can get me 12 or 13, I would be elated. What did you find with people's expectations?
No, actually, very high expectations, I gotta say. So but if the 10% is on average, everyone looked for 20 and above. Yeah. And they knew that risk is involved on one hand, but they all really looked for very high returns.
Mm-hmm. And
Yeah.
what was there any trick to educate them or get their thinking much more down to reality as far as expectations go?
Unfortunately, not, because what I did is, of course, said, okay, we are going to risk for the whole portfolio not more than 30%. That was the rule.
Mm-hmm.
But some of them, even when they saw a loss of 5% or even 10%, they actually was ready to bail out. So yeah, so it's human nature.
Interesting. So their was there high expectations? Did it influence you whether you wanted to manage their money or not? Were you more leaning toward people who had realistic expectations?
Definitely. And also those that won't run away just because we are down 5% or whatever. Because a lot of people would say, like on paper and the agreement, they will write that they agreed to 30% loss, but in reality, when they saw a 5-7% loss, that was the end for them.
Did any of them later, did it spur them to want to become traders themselves or to learn about investing and do it themselves? No. I see. Did they just put their money?
Even those guys that knew about trading or even learned a little bit, they didn't want to handle it. They wanted to do different things. So yeah.
So they went back to keeping their money in the bank account and a couple percent.
Either bank or management, portfolio management.
I see. So did you get into teaching? I mean, did they view you as a teacher? I mean, you like to teach now, right? Help traders.
I mean, yeah, it's I guess it's in my genes because my grandfather was a teacher, and all of my cousins and my uncles also in teaching university and college and all of those things. So I guess it just ran into me. I was in the military. I was in the educational corps. So yeah, so I had students, I had traders that I mentored, just like a one-on-one. Sit down most of the time, just sit down trading with them, showing them what I do, look at how they trade, so I can just fine tune it, and yeah, and after a few years, I had this prop firm in Tel Aviv that I was the head of the trader there. So we sat down a bunch of traders and traded basically every day. I was the manager there, just handling the risk and trying to push the traders to basically become better.
I see. And what did you focus on in first and second? Did you focus first on, hey, let's go research a bunch of technical indicators and find out which one works best, or let's research companies to go long or short? Or did you focus in on psychology first? Kind of what were the themes that you focused on in order?
I mean, of course, it was everything. We touched on the psychological side of trading, the way you want to improve and push yourself. If you recall, I had a friend, is still alive, that helped me, a guy that is basically a businessman that helped me to become better trader just by pushing me and to break the boundaries and my limits. So I basically did the same for them psychologically. And you know, the guys that had very negative approach and beat themselves up after losing trade and all of those things, we worked on that. And besides that, the technical side, not just looking for indicators and stuff like that, but more understanding price action. Me personally, I trade mostly price action. I do use some indicators, but it's just to add just a little bit more to, you know, to the flavor of the price action. So that's my that was my main focus for myself and for them as well. Reading more of the movement, the momentum, understanding who's in control.
Well, what do you say to traders who say, "Hey, you know, day trading sounds nice, but I'm not cut out for that mentally. I'm more of a swing trader. You know, hold a position for days or weeks, months, that kind of thing." Do you deal with those kind of traders?
No, because my firm is all about day trading. Probably in the near future, we will add also some swing programs. So for those of you, for those who would like to swing trade, but in my experience, at least, of course, there are guys that don't want to do day trading for many reasons. But swing trading, at least in my eyes, is a little bit boring. That's my problem with swing trading, I guess, because you know, you find the stock and you enter a position, but you don't really manage it. You don't leave it, and I guess that's my personal problem with swing trading. This is why you will see me in 70 or 80 years old still day trading.
You like the thrill of the instant gratification, or the instant
yeah, and also just analyzing it in real time, just not even the making profits or losing, just watching something move in front of you and analyze it, and hopefully to make a right call.
So what about when it comes to okay, so we've talked about the psychology of you know, people losing their own money and managing friends and family's money. What about managing a block of money that we don't know the owner? It's not personal. What is the psychological difference between managing a block of money that you didn't specifically earn, and it's from somebody you don't know?
It's a huge advantage to do that. Huge. I see traders in our company that will easily, that just telling me that they didn't make it as retail trader, trades other people money, or like friends and family, but in our company is a talent, is a great success. Because the moment you, obviously money is a big issue in trading, right? We all experience it from a different angle, depends on how we grew up and all of those things. But in the end, money will play a big role. And if you can eliminate that, or at least push it aside, you will automatically see the difference in the growth. Now, when you're managing your own, like, family money or friends, people you talk to or get to know, you do have some sentimental to that risk, the money. You don't want to lose their money. You feel like sometimes, as you mentioned, sometimes you've been too cautious, right? And in the case of someone else's money, like a prop firm, you don't really care about, to put it right, you don't really care about my money or the founder's money. So you can make the right calls, not based on money. And that's a huge difference. We see it on our traders. Huge difference when you don't care about the money, you're making easy decisions, and most of the time will be the right decisions. I guess when it comes to think about it, with everything you do in life, right? If you take money out of the equation, most of the time you will get the right decision.
Right. So you feel that these traders who use like a pooled money, their fear of loss is greatly lessened, right? Because it's sort of a little bit like playing with house money.
Exactly. Yeah. Because you don't care if you're going to lose it. Now, in our case, in Trader Pool, you pay like a fee to get into the evaluation phase, right? So let's say you pay $300. This is basically what you're risking. So you say, from one end, you a little bit obligate because you paid the $300, but other than that, if you're losing $5,000, you don't really care. It's not yours. So it's easier to go in a trade with confidence and not thinking, oh, I'm going to lose it. What will happen if I would lose $3,000? And then I will want to bring it back and get back to the game and all of those things. So,
so for traders who are more swing traders or buy and hold, do you have any kind of classes or education that people can transition over and learn how to day trade because some people could be intimidated just because that terminology implies has certain implications there. And
yeah, so we do have in our hub, like dashboard, we do have a lot of information about day trading, just normal videos that explain the terminology, and all the way to a playbook. So basically trades I made and show the guys how to trade properly, at least in my opinion, and how to improve your trading, how to do like a real good recap on your trades. And we have an ebook that we prepared that covered with a lot of information about day trading. And of course, we do have our, besides chat with traders that are also like any other day, we'll upload trades that I make. We do have, our community and all of those for our traders.
Do you have any charts or anything that you could show us, like as examples of things you've done in the past, or examples of kind of like what you talk about, what you show?
Yeah, sure. Yeah. Let me just grab the screen. Just let me know if you can see the screen.
Yes.
Okay, so for example, today I'll walk through it and then we'll talk about 2 trades that I made today. So today I had in mind two trades or 2 stocks to watch. One is Microsoft and the other one was Boeing. And I also mentioned I was live, pre-market live I did today. So when I spoke to the guys, I also mentioned Tesla, because you always want to keep an eye on Tesla because the moves there are crazy. So Microsoft, for example, was on my scanners just because of the earnings. It popped up after, like yesterday, after the close, and then dropped all the way down. And what I did with the guys before the opening bell is basically preparing the scenarios that, let me clear the chart just a little bit. So just the scenarios I wanted to see from Microsoft in order to trade it. And this is something we do quite occasionally. So it was right about here when we started to draw the lines and prepare the scenarios. And that's what I'll do every day. Take the right stock that we want to follow because of the news, and then just make sure we have the right supply area or demand area and draw the lines. Now, so in this case, there was one scenario that it will pop up break through this pre-market resistance, holding the support level of the 200 EMA, and from there go long. The second scenario, actually the first scenario, was that it either will go up to that resistance level, that is a trend line coming from the hourly chart, or to retest the 200 EMA from the bottom and the pre-market, and then go short. And we prepared the possibility to continue to the downside and taking profits at around this area of the 234. That's a major support level from the 1H, either close of the gap or entry in a gap, those kind of things. So so this is what we prepared, and we also add two other major support level at 232 and 230, 31. So the market opened, so the price moved a little bit up to the resistance level, one of those that we marked, went all the way down to the second support level, bounced up, and then continued all the way down to the 231. From that point, it's just moved higher. So what I did is that was it. So what I did is basically, I missed the first leg to the downside. I actually should have taken it, but I just missed it. It was quick, and sometimes people here in the office not letting me trade. So I entered here again, but then since it was a little bit lower than what I wanted to short, I had to add more to my position when it bounced up. So that's what I did. As soon as it pulled back to those resistance levels, I added more and took my partials right here just before it bounced up again. So that's a trade. Although it wasn't an amazing trade, it was a good trade because we prepared ourselves very good to what to expect. And as soon as we saw that the bounce into the resistance or holding support and all of those things, we can easily trade, much easier to trade it when we prepared. So when we reached that support level, I understood that the price might pop up. So it makes sense for me to take my partial out and those things.
I see. We're that support level. Of course, now we don't see the horizontal line. Is that going back how far on the time frame? Just looking at the chart right there, it doesn't seem to be. Okay, so where does that support level go back to?
Okay, so let me take the 1H. Okay, so it's I'll take off the pre-market. Okay, so you can see it very clearly here. There was a gap up. There was a gap up still open. So that acted as a nice resistance and support. We played with it. There was also this trend line that came from the bottom and also held it perfectly. And if it were, and that was basically the last straw. It held it one time, the second time, resistant before that. So it makes sense that it will hold again. If it would have break it, then we would probably would have gone all the way down to close that gap. So that was the idea, to play on those levels.
I see. So you're looking to go long off the dip here.
In this case, I took short to the dip.
Oh, you shorted into the dip. Okay.
Yeah. So those.
I see. And what's your view on it now that it's approaching up to right around near where it closed yesterday, as far as a resistance level to flip it and go short at these
Yeah,
levels?
so we can do a few things. First of all, as you said, there is the close of the gap of yesterday. So if we will reach that, it will probably will react as resistant. And if you already have this nice trend line, you can extend it. And as you can see, it's already starting to bounce around it. So I'm not sure if we will reach the resistance level, but it's started to get a little weaker. You can see that if we're looking at the waves, the trends, you can see a one nice move, solid move, the other one, and the third one is already becoming a little bit more weaker, like the angle of the wave, right? So in my mind, if we, the best way to will be to look at the trade is actually if we will break the 200 EMA that held greatly here and also here, and then retest it, and retest it, and only then go short. That will be like the best setup to take, just because it will be much more confirmed, I guess.
But you're looking to close out before the end of the day anyway. So
yeah,
I see. So we're already halfway through the trade.
I'm already in this case, I'm already out. Yeah, my trade was right here, those arrows. I entered short here, shorted here, another chunk here, and then closed it. That's it. But if I'm looking to get to a short position again, the best setup will be just to wait to break the 200 EMA, show us that it's ready to move down again, retest it, and then short it, basically.
And so do you put any time limit that you won't initiate a new position after a certain period of time during the day, trading day?
Not really. I mostly will trade the first hour of the day, just because managing a company of traders, it's hard anyway. So I give myself this first hour to trade, and then usually I will leave. I won't trade again unless I miss the first hour, and then I will give myself like an hour or 2 hours more toward the end of the day.
Okay, we have a question from Tessa.
Yeah, I just was wondering, how much does volume play into this? Do you look at volume?
Yeah, so first of all, I want to see a lot of volume coming in, 1 million and above, when it comes to trading. When it's come to find the right stock to trade on. So in pre-market, I want to see 1 million and more. That will be a good indication for me. And also you can use the volume, at least the way I do it is using the volume when I want to buy the dip. And I want to see, basically, it's not in this case, but when I want to see, or selling the top, we can talk about it like here. You can see that the volume increased dramatically when we reached the top, right? Well, we did it. We had a nice volume here, maybe a little bit here, but then when we reached the top, we had the most volume. Now, when we're looking at the chart going up, we basically, this is just the beginning of the trend, right? Because we're still consolidating, we're still ranging, we don't really have a trend. Then the movement started. So we have nice volume coming in, pushing the price higher, all of those. But then when we reach the top, and that's also the low, or at least, let's see if it's, yeah, that's also, sorry, the low of yesterday. So then, only then, after we made a nice move all the way from 231 to 240, then the volume really increased. And that is a good indication for the manipulation that the market makers will create. Because like a big company or market maker, if you want to trade big, it needs the other side, right? If you want to short sell him, or you want to get rid of his shares, then you need someone from the other side to buy it. But how do you create place where a lot of people will start buying. So you need to manipulate the price or create on the chart patterns and whatnot to make people believe, or algos believe, that the price will continue higher. How did they do that here? They basically created flags, right? A nice bull flag. A lot of people looking at that flag and saying, I know that a bull flag is a continuation pattern, so let me buy this breakout, right? And they say, well, volume coming in, it must continue higher, let me buy it. So when they buy it, it's easily for them to sell, for the other side to sell. So this is why when it comes to any type of patterns, we can't use just the patterns, but we need to also look back on the chart and see where it came from, right? So if we see a bull flag after we already made a strong momentum move to the upside, it doesn't make sense that the bull flag will be there. It gives more advantage to, or not advantage, but likelihood that the manipulation will occur. Does that make sense?
Mm-hmm.
Yeah, thank you.
Do you use any other volume related technical indicators like time segmented volume or on balance volume, anything like that, since you are looking at volume bars?
I don't, not because it's not good or anything like that. I don't really have an opinion on those.
Mm-hmm.
Didn't check them thoroughly to say anything about them.
Mm-hmm.
I just, I guess in my point of view, I already know what I want to know.
Mm-hmm.
And what I'm working on to improve myself is more of on the trade management side and increasing my sizes over and over again. So those kind of things.
I see. So it sounds like you try to keep things fairly relatively simple, so you don't get burdened by all these different indicators and different ways to look at it, right? You have a system down.
Yeah, and I believe that most traders usually, and I used to when I have like a student, I used to go to their house and trade with them, and some of them had like 5-10 indicators on the chart. So you don't really see a chart; you just see indicators. And I always said that, the price and the volume, it's the most important, because the indicators come from the price and the volume. So learn the price and the volume, it will be much easier to understand what's going on instead of just looking at the indicators.
Mm-hmm.
Yeah.
We have a question from Nick. Nick, go ahead. Nick, I think you're on mute.
Oops, sorry, I didn't realize that. So based on like this and some of the charts that you've posted in the past, do you think the biggest edge in trading comes in the shortest time frames?
The biggest edge.
So like to Microsoft, for example, my morning looked almost identical to yours because I'm like, it's going to fill at this resistance potentially and drop to this support. That's my trade. Didn't really care what happened after that, but I'm just in my mind, I'm like, it fills at 234, it goes to 232. That's the only time frame I really cared about the trade. And so do you think with your trading as well, do you think the easiest trades come in the short time frames like that, when your target's like resistance 1 to support 1, and then that's that, versus people who think like, I'm going to swing this all day and see what happens?
Yeah, so you're talking about day trading, either that or that, right? Not
Yes.
Swing trading compared to, okay.
Yeah. I feel like a lot of day traders, like they get into like, especially newer traders, they would have looked at Microsoft today and be like, it trailed down overnight. I'm going to shoot for like 225. And I feel like so many traders have such high expectations for where a stock can go. But then it's much easier when you realize you just trade from resistance 1 to support 1.
Yeah, that makes sense. I see that also in some of our traders that really want to take the full potential of the move, or really thinking that they can hold it for the end of the day. And it's like guys that, you know, $4,000 in profit on one trade, and I'm looking at I have like a dealer, or you know, like a manager platform that I can see obviously all the trades, and I'm looking at the trade and I'm telling myself, take the partial, sell something, take something home, and he's continued to hold it, and then it turns again and basically go to break even or even a loss. The reason I'm doing that, I do have trades that I also like to keep and hold for maybe a little bit longer, but I specifically doing that for two reasons. One, the market is super volatile and reversing all the time. You know, you can start like Tesla and Microsoft, and basically the day just breaking down, melting down, and then bouncing up and creating a huge move to the upside. And then an hour from now, you can easily see the market falling down again. So I just like to take those, because of the market conditions, I just like to be a little bit more aggressive. And secondly, just my position in the firm, you know, I cannot sit down right now and trade for 4 hours. I gotta have this 30 to an hour trade, take what I can, and that's it. So those two things drive me right now. Yeah.
Great. We have another question from Tessa.
I don't know exactly how to ask this, but this is more psychological. How do you overcome the psychological part of it, where you know, you have the confidence to just scale up and put on your trade that you see that you had in your trading plan, but how do you overcome that, you know, and just do it?
So what actually worked for me is that as soon as you do that every day with that scenarios and drawing the chart, just putting your lines and understanding what you want to expect, what you want to see. If you'll do that for 3 months, and you see that 60% of the time, 70% of the time you will be right, that will automatically, that what helped me, will give you the confidence to put on the trade. And you will start with a small chunk, like a small risk at the beginning, just to feel it and see that it's working. And, you know, like anything you do, as soon as you understand that you know what you're doing, you will start to execute that and then increase the size and all of those. So just show yourself that you are right, that you understand what you're looking at and for.
And do you in your program, I mean, do you have like a process for the traders to journal their thoughts and things like that, you know, before and after, or before, during, and after? What's your take on that?
So they do have access to a process of journalism. So, and obviously not all of them will do that. Fortunately or not fortunately, they're not with me in the office. We are worldwide, so I don't really know what they are doing, except from those who will share it with me, and they usually will send it to my email. I actually have, you know, when they reach in a daily loss, for example, they will get an email saying, share with me what happened, tell me what's going on with you, that was just a mistake, or what are you feeling? So most of them, not all of them, but most of them that really taking it seriously will share a full email. It could be like 2 or 3 page email saying what happened this day, and then I reply, and we're going back and forth with the emails. Yeah, so that's basically the process. I do have some collaborations I'm working with some of the trading journal companies that I want to bring to Trader Pool, and hopefully we will do that in the next month or so.
Great. So how your Trade the Pool program works, what are the different levels? I mean, you mentioned risking, a few $100s to sign up for the course. What are the different levels and what's required? How long of a time frame?
Okay, so let me just grab it from the website. It will be easier for them to see. Okay, so basically, when you go through our program, we have 3 tiers. You choose, what you do is not choosing the account really, but choosing the risk daily loss that you want to take. Okay, so you can either risk 700, 13, and 2000. So as soon as you understand which one is better for you, and guys that are already experienced, that been trading for 10 years, 15 years, even 6 years, will usually take the 2000. They feel already good with their trading and they want to maximize it. They just need more capital, so they will go to the higher daily loss. And then usually the new guys that been trading for 3 months or 6 months will start little with $700 daily loss. That it's also amazing. The fee for each program varies, so either 300, 475, 1240, and basically they are all the same. The parameters are all the same. You need to make 2 times your daily loss in order to become a funded trader. Your maximum drawdown, let's say 2100, you need to make 42. Profit split varies between the programs. 50 trades. We don't want guys that will pass just by 1 click with a lucky trade. So I do want to see consistency. I want to see that you actually know how to trade. And other than that, you have 30 days also to prove that. If you didn't reach the goal within 30 days, you can pay another $300 and keep the progress that you already made. So you're not starting from scratch. Let's say you made, I don't know, $3,000 out of the 42, and that's it. The 30 days are gone. So you can pay the extra 300 and continue from that point. So hopefully you will make it within 2 months. Most of our traders can make it within those. Most of our traders made it within those 30 days. We had a guy that made it in 7 days, but he's a very experienced trader, 15 years trading. So within 7 days, he reached the goal. Max exposure, 80,000, 160, 260. Those are very big numbers for any trader, and especially for young guys that might not have it. And we also have Transpider or trade ideas for free for 30 days. So as soon as you sign in, you basically can join either Transpider or trade ideas. And those are amazing. I don't know if you have an experience with that, Ian. Those are really incredible platforms. Yeah, for analysis, for scanning, for back testing. So today it's in that. So
I see. So quick question. So the profit target for the $300 program, that's $4,200 of profit in a month. And is that correct?
Yep.
Okay. And you have access to a maximum of $80,000 to work with. Is that correct?
You have 80,000 to work with. Yeah. So
right.
And basically the full position, doesn't matter if it's 1 position or 10, it cannot come more than 80,000.
I see. So it's roughly a 5% gain in a month net. to get qualified, right? To pass the 30-day period. Is that correct?
Yeah.
Okay.
And you do have $700 to risk. So
Mm,
I mean, for me, when I'm looking at even for a new trader, it just makes sense just because the fact that it doesn't need to bring his own capital, money that we worked hard to get, and we don't know if we will get it, if we will make it again, if we will lose it. So it just make more sense instead of putting $3,000 or $5,000 in a broker account. You take those like 10% of it and you trade it. We do have traders that paid 6 months until they reach the goal. And again, it makes sense because 6 months is only in less than $2,000. And with $2,000, you get in the opportunity to make money and trade $80,000. So yeah.
mm-hmm. And I noticed on the higher programs, the ultimate buying power for 1240, it looks like your net return that you have to achieve for the month is actually a little bit lower, and you have more capital to work with. So it looks to be a little more efficient. It looks like the payout. Oh, the payout increases, right?
Yeah, the payout increases. I mean, if you work right and make money for the company with this sizes, then it makes sense to give you more. You're making more to the company. There were guys in the other company that we also have that made $200,000 last month. So it makes sense that if he's making more, we will appreciate it and give him more.
Mm-hmm. Great. Are there any other monthly fees and other hidden costs that sometimes are associated with other prop firms?
No.
No. Okay.
That's what you pay. We do have the commission, but it's not us. It's the liquidity provider. So yeah.
Okay, great. Any last questions from anyone before we wrap up?
I have a question. I have two questions. The first is, I forgot, maybe you did mention it, Michael. Do you offer training for the traders? And two, what's the difference between Trade the Pool and other prop firms? What's the main difference?
So we don't have a specific a training or a course. We do have, on our YouTube channel, I did create a quick short course for pre-market prep and those kind of things. And we do have the playbook and the ebook. We do have a lot of tools, but not specifically, teaching how to trade. And guys are mostly sending me a lot of emails or through Discord and just asking me about trades they made and if I can help them analyze it and those kind of things. So we don't offer specific course, but we have the information on how to trade properly. So anyone that will ask us will get the right answer. And regarding the question of the other prop firms, at the moment, at least, we are the only prop firm in the world that offering stocks. Most of the prop firms out there are usually for Forex. And if they have stocks, it's usually MetaTrader stocks. So MetaTrader is a software usually familiar with for Forex. So this is the main difference. We are actually the first prop online, of course, that actually have stocks, and you don't need to pay. There is one company, I won't mention the name, but you need to pay like $3,000 or $5,000 to buy their course, and only if you go through XYZ, then you will become funded. I don't really see the point of that because I trade the way I trade. It doesn't mean that it's the right way and approach for you. Trade whatever you want, whenever you want, as long as you know what you're doing, that's fine with me. I don't need you to trade the way that I trade.
And okay, Nick has a question. I'll let Nick go first.
What platform do your traders get to trade on? Like, I think your charting was in Thinkorswim right there that you pulled up.
Yeah, so our platform is a proprietary platform. It's called Trader Evolution, and it's basically focused on stocks. We have all the necessary tools, and if we don't, we usually just come up with a collaboration like with TrendSpider or Trade Ideas, and just you can play with those and combine your trading with those two. So execute on our platform and then analyze it on Thinkorswim or whatever you like.
Great. Anyone else?
I'll preface this question with, you don't have to answer it. What is the success rate or fail rate of the people who take these challenges?
And that's a great question. So I don't know if you're familiar, Nick, but we are basically a brand of a bigger company called The Fivers. The Fivers been around for the last 6-7 years, and they mainly focus on Forex. So so they have more data basically on their side, and we're talking about thousands of traders. The success rate is roughly between 30% to 40%. And that's also amazing because, in most cases, traders, like 5% will make money. So in this case, they're at around 30 to 40%. We are just at the beginning, so we're roughly standing on the 10%. In my opinion, by the end of 2023, we will reach that goal of 30 to 40%. And the reason I'm saying that is because I believe we didn't, at least yet, reached the hardcore stock day traders. So at the moment, we have roughly 60% of our traders that did Forex, and now they come in to realize they want to trade stocks. And the other 40% are literally stock traders. So I believe that by the end of 2023, we will have 80-20 or 90-10 to real stock day traders. And when we'll do that, we will get better results. Although 10% is still good, but yeah.
No, it is. That's actually, I was expecting like 2 to 3% answer.
Oh,
because there's so many people think like, I'm going to do this, and then they just they realize they can't really do it. Like newer traders just want to jump into it. One more question: is your platform available in every country? Like for the Chat with Trader community, there's people from all over the world. Can anyone join, or are there international restrictions?
Just the normal restrictions, not working with I forgot the term for it, but bad people.
Well, I'm saying though, like, oh, okay, gotcha. So like someone you're based in Israel, but someone from the United States can join, someone from Canada can join.
Yeah, most of our traders are either from the US or UK, and then we have the rest in Europe mostly. And by the way, regarding the previous thing that you mentioned with the 2%, so there is 2 major reasons why I see, or 3 major reasons why I see it will working and will work along the way. Because one, like I said, they're not risking their own money, so they detaching that part. Second, we give them enough capital to trade on. Most traders just don't have it, and then if we start with $3,000, you can't really execute well. Maybe you want to take Tesla, but you don't have enough money, or you want to take 2 trades and you don't have enough money. So that also a major problem. And lastly, and that's what we see mostly in the Fivers, the Forex company, is that the rules that we are setting or applying those strict rules are actually working to the trader favor. So for example, the daily loss, the $700, you can't really lose more than $700 no matter what you do. That's automatically in the system. And you can actually, within the $700 for one trade, one position, you can risk not more than 30% of the 700. So you're actually risking only $210. So those kind of elements that we applied in the system, in the program, actually really working well and to the trader favor.
One
Great.
more question. I have one more question. Sorry, Ian.
No worries.
I don't know. I read it somewhere. Maybe I read it wrong on the website, on your website. But is this also a main difference between Trade the Pool and the other prop firms? It's online. Is there like, you know, if traders wanted to communicate with each other in the program, can they do that? Or
Yeah,
did I read it somewhere
no,
wrong?
they can definitely do that. They have our Discord, so they're doing that a little bit, but they can do that even more. The only thing, I don't know if that's what you're referring to, they cannot coordinate the same trades. So we want them to trade individually, and we want them to have their own opinion. They can talk to each other and express what they think about the trade, but they cannot coordinate it. Like, okay, you guys ready? We are all going to enter Tesla right now. Everyone buy Tesla, those kind of things.
Mhm.
Mhm. Okay.